What happens if interest rates get too high? I'm Tim Diesel, commercial real estate consultant, and today I want to talk to you about what I think would happen if rates get too high. And this is just an opinion, so take it however you will, and if it helps you in your business, it's fantastic. I really want you to take advantage of it. So here's what's been going on overall, maybe the last couple of years, 4 or 5 years. I'm sure you guys have all noticed. Rates have been going up, they've been going back down. Lately, they've been creeping up really fast. Not even creeping up, they've really been going up fast. And they're expected to go even higher and more this year. And they most definitely will. So here's the way things will play out. If you're already locked in to a 30-year fixed on your home, right? You're probably not going to get affected as much. I don't know too many people with a variable interest rate. I don't even know if they still have those, but if they do, that's probably the biggest. I know there's on SBA financing on businesses, they do get variable, but on most of everything else, most of the time it's fixed. There's a lot of commercial deals that have maybe a 5-year term or something like that, right? Where it ends up and it resets. So if you're already in the deal, you're not going to be as affected as much. This is going to affect the new buyer. So in this example, you're going to buy a property, and what you were looking at for, let's just call it $1 million, and you were looking at a maybe 3.5% interest rate a year ago. Now you've noticed it's gone up to 5.5%. Well, your buying power decreases. So it hurts the person in the property because they can't sell it for that top dollar anymore. Now, this is what's going to happen because you've been seeing cap rates in commercial real estate at 3.5 to 5.5%. Now, if you've been following my stuff, what I've been talking about for years, you should never be buying those. That doesn't even make sense unless you're a cash buyer and you are looking for a slight delta in that little edge of maybe 1 or 2% because you're sitting on maybe $15-20 million. Okay, that makes a lot of sense to me. If you are trying to get financing, your cost of capital just increased big time. So it's razor thin margins. And unfortunately in real estate, what people don't talk about is there's a lot of stuff that comes up. And I'm surprised that a lot of people don't mention this. A lot of gurus actually leave this part out. There is a lot of expenses that are unexpected. They just come up. And I'm talking about roof repairs, tenants damaging the property. There's all kinds of things that just kind of happen. You can't really factor in for that. So when your margins are really that thin, anything could happen. Yeah, you could always raise rents, but sooner or later, there's a cap to how high you can raise those rents. And it's going to have to get those cap rates back to reality a little bit. So if you look through commercial real estate for years and years and years, through history, most people are not buying at four caps. That just doesn't make sense. Not even on a triple net 15-year lease. That just never happened. The reason why it's happening now is because we have a lot of cash, and I think if they don't keep an influx of cash, and I've talked about this, it's going to be a little tough for you to buy stuff because most people have a limited supply of cash. After a while, you can only buy so many more properties, so you're going to need financing. Now, if you're in a home and you bought it for $500,000 and you're at a 3% interest rate, and there's equity that goes up to $700,000-800,000 and so on and so forth, well, you want to tap into that equity. And the biggest problem is you don't want to refinance the whole house and go up to a 5.5% interest rate or 6%, whatever it's going to be. So what you're going to start seeing is a lot of seconds, a lot of equity lines, home equity lines. So all those were not getting pushed as much, but back in 2005 or something like that, they were pushing those a lot. Seconds and equity lines are going to be coming back because they need to have people tapping into that equity. So these are ways of doing it. So there has to be a lot more money coming out there. They can't just have a credit freeze because obviously this stuff wouldn't make sense. So what's going to happen if the rates get up too high, one of two things, and if you think about this logically, it's going to make a lot of sense to you. If interest rates are actually, 7%, 8%, 9%, it's time to start thinking, why don't I just leave my money at the bank? Why am I going through all this craziness? It's not making any more sense to get out there and start investing to make a 5% return. I really want to beat inflation. I really want to do all this. I'll just park my money until I figure out what's happening here. So people used to do that. People used to put money in a money market because they used to get 6%, 7%. 15 years ago, not too long ago. Those days are over now. That's kind of changed a little bit, right? Because rates have gone down so low, people have to start actively investing to getting into this stuff. So there's going to be a point where rates get too high, and I don't know when that's going to be. I don't think anyone does, but you're going to see it, and it's really going to be caused by just out of control rate increases, right? So the people that are in their properties right now, or the investors that have bought, they're not going to feel it so much, because I don't think most people are in a loan where the rates fluctuate very much. I have a feeling it's going to affect the buyers, so if they're trying to sell. So if they're cash flowing just fine and they don't panic, they're going to be fantastic. It's not going to be a problem. So even if prices go down, you're not losing money unless you sell. So if you just sit tight for a while, you're going to be good. But what's going to happen inevitably, there's going to be a panic, and everyone's going to have to start thinking, I'm losing everything I have, because there's not enough. Maybe they don't have enough cash. Maybe their business has decreased. Whatever, something else happens that's going to force them to sell or pull that equity out or that cash out. Now, the beauty of this is you're going to see in commercial real estate, you're going to see a lot of owner financing deals coming back. They will. Right now, it's been tougher for the last couple of years. I have been able to pull some owner financing deals, but it's been tougher. It was so much smoother in the 2010 till 2012 or 13, something like that. Now it's tough. What's going to happen is banks, when they get tougher and tighter and their loan to values go up to 70%, you tell the owner or the seller, hey, listen, I need you to participate with me because this is getting really tough to pull off. So everyone that's kind of freaking out about interest rates, it's not like a stock market where, you lose X amount of dollars in one day. It usually doesn't happen like that. It takes time and time and time and time. So even if everything went up tomorrow, it's going to take a year or so or something for everything to roll in. It's not going to just, it doesn't just crash overnight. It's never done that. It takes a while. So I hope that helped out. I hope that kind of put everybody not so much at ease. I mean, it's going to happen. You just want to be prepared for it. So if you have any questions on it, please let me know. I'll be glad to help you. Thank you.